Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com. And in this video, I am going to look at how you can use the opening range as a great indicator during earnings season so that you'll have a better ability to figure out which stocks, when they come out with earnings, are likely to continue to move higher and have huge days like this. And not only is it good to know for which stocks are going to have huge days like this today, but it'll also enable you to know which stocks you can follow up with and look for big subsequent moves in the coming days after earnings. So before I get into all that, let me just make sure that if you're just finding us on YouTube, please subscribe and like this video. Or if you're finding us on Facebook, please like this video. And also know that you can get more videos like this at marketgauge.com/tutorials. And finally, if you use Twitter, follow us on Twitter at two different handles, at MarketGauge and at Market Minute. We've got a lot of additional information that we put out on Twitter. And hopefully you're watching this video in HD. If you're not, you can change your settings in the lower right-hand corner so you can see it more clearly. Okay, so I'm actually going to do a whole training on the opening range this week, Thursday night. I'll put a link to that around this video, under the video above it. But to get you started, one quick way to use the opening range to make sure you're going in the right direction of a stock, especially during earnings, is to watch the action around the 30-minute opening range. So now if you're not familiar with the 30-minute opening range, it's simply the highest high. So over here is a 5-minute chart. I use 5 minutes because it enables me to see enough data. If you take the highest high of the first 30 minutes and the lowest low of the first 30 minutes, that is your 30-minute opening range. Now, these levels are incredibly powerful when you know how to use them. I'll go into more of this in the training, but for right now, when a stock announces earnings and you get that normal volatility, if you watch how it trades within that first 30 minutes of the day, it will often put you in the right direction for the rest of the day. So there are patterns, and we'll go over more of those on Thursday. There are patterns to look for, but in this case, Lockheed Martin, as you can see, established its 30-minute opening range, then consolidated up and around its 30-minute opening range before breaking out to the upside. This is a really bullish pattern. It's especially bullish when you see that the overall market, as I've put down here, the SPYs, have done exactly the opposite. So had the market moved higher and moved above its opening range, this thing would probably be up magnitudes more. So despite the weak market, and notice the market's action, that once it broke its opening range on the downside, has been unable to get going to the upside. And despite that, this has stayed over its opening range high and moved higher. Now, when you see action like this, this is the type of stock you want to watch for tomorrow to see if it pulls back, and an area to look for it to pull back and do a reversal so that you can buy it low on that particular day is right around the high of today's opening range. So today's opening range high, when it is so significant as it has been today, is often going to be another level to watch tomorrow. All right, so two things. One, until the stock really gets going outside of its opening range, don't mess around with it and you'll keep yourself out of trouble. Let's take a look at a couple others from today. Here's VLO. So VLO, notice, very similar pattern. Okay, in this case, it breaks the opening range high. When it pulls back, doesn't come back in too much, and despite the market heading lower, this breaks out, flags, and moves higher. Now again, had the market had a decent day and even just come back up to its high, this could have had a much, much bigger day. But there's a lot of stocks that are announcing earnings. Which ones do you want to keep following after big up days like this? Ones that perform well relative to their opening range. Now, sometimes well just means staying above their opening range low if they've had a huge move higher. So let's look at Microsoft, for example. So Microsoft announced its earnings the other day, not today. Notice it gapped, had a huge gap higher, and it didn't follow through, right? Here's the gap higher, it didn't follow through, but it held its 30-minute opening range, and then when the market was strong the next day, this was just as strong. In fact, it was one of the leaders of the market the following day and took off and had a nice run. Now look at it. Today, it's holding its opening range low, even though the overall market is well below its opening range low. The Qs look the same. So this is the footprint of a really strong stock. And every day, if you had not if you had followed the direction of the opening range and not tried to fight it, it'll keep you on the right side. So in other words, we weren't trying to get short Microsoft in here without a really substantial break of the 30-minute opening range. We were looking to be long Microsoft above the opening range. That makes sense. We don't look to take any position as long as, I mean, suppose you could buy it against the low of the opening range here. I'll talk about how to do that in the course on Thursday, but we're always going in the direction of that opening range. It keeps us out of trouble. Here's another example. In this case, this is how you stay out of trouble. All right, so when Baker Hughes announces good earnings today, it gaps higher, just like we saw with VLO or LMT. But look, the pattern is totally different. Here's its opening range high. It doesn't even come close to it after establishing it. And when it breaks its opening range low, just like the market, it breaks it significantly, and it's not able to get back up into it. So we're not trying to buy it down below the opening range because that's where the bears are in control, and that keeps us out of trouble. Now this one managed to hang around and not go further, but sometimes they'll just keep going and going and going and going to the downside, and you really get hurt. All right, so in the training, we'll talk about when you can get in so that you can buy it low. But for now, just stay away if it is below that opening range, and it will keep you out of a lot of trouble. Let's take a look at CAT. Here's CAT. So CAT, just like Baker Hughes, doesn't have the pattern we saw in VLO or in Lockheed Martin. And in fact, while it tried to hold the low of its opening range, it broke pretty significantly and then continued lower. That's telling you today is not the day to buy CAT, even though its earnings numbers were pretty good. All right, so that's just a really quick taste of how you can use the opening range to help you identify the stocks that are worth paying attention on earnings day and the ones you should just ignore because there's plenty of them out there. Don't waste your time on the ones that aren't acting right. Hope that helps, and I'll see you in the next video.